gold jumps like $100 a day. It's pretty nuts. Well, that is all debasement trade. These big players, moving their reserves into a neutral reserve asset, which is that. This has sparked a lot of interesting insight into Bitcoin and Bitcoin markets and how it works. I actually still believe that this is the year where Bitcoin reaches that sort of level of self-actualization because of what's happening on the global stage. To me, if Bitcoin is ever going to work and fulfill that promise, this is the year. But I think the debasement trade is here until we get some kind of reset, certainly through 2026.
Welcome back to the Bitcoin Policy Hour. It's a new week here in Washington, D.C. Zach and I actually aren't in Washington, D.C., but we'll call it Washington, D.C. anyway. As usual, joined by Zach Shapiro and Ken Egan of the Bitcoin Policy Institute. Ken, you're not in the dungeon this week. What's going on?
No. For those of you who don't know DC, it snows every year in DC. Every year, at least once, we get a decent snowstorm, and yet every time it snows, it is like the first time it's ever snowed. DC it is absolute Thunderdome. The city's paralyzed. I went downtown last night, and every sidewalk is blocked with piles of snow. The government was closed for 2 days, Monday and Tuesday. And I think they are on liberal leave, but they're just coming back today. So DC just doesn't do well in the snow. And because the government's closed, all of our meetings are obviously, canceled or postponed or virtual. So taking advantage of the snow to work out of the house and actually get some better lighting for the podcast, if nothing else.
And some shoveling reps in too, right?
Yeah, right. You saw, Monday was arms, legs, back, core, and cardio day because it was snow, but it was also sleet and freezing rain. So it was like twice the density of normal snow. So it was a good workout. But I can still do it. I'm not, I'm up in limber and no back problems. So knock on wood, staying strong, man. Staying strong. Trying to anyway.
Love to see it. Yeah, obviously, we're recording on Wednesday, January 28th. We had a big winter storm this past weekend, so hopefully everyone's doing all right with that. All right, let's dig into the topics for the week here. I think the banner news, and maybe we had seen this coming for a little bit, but still worth talking about here for a little bit, is the USAT launch, which is Tether's Genius compliant stablecoin here in the United States. It sounds like, again, there's going to be two versions of Tether. There's going to be the the so-called Wild West version, and then the Genius compliant with 100% reserves in short-dated U.S. Treasuries. Zach, why don't you kick us off here? Is there anything to think about, like timing-wise here? Is this kind of the timeline you were expecting, given the passage of the Genius Act? Anything to watch out for, kind of on the policy front, especially as market structure is moving through Congress and the stablecoin yield question is definitely at hand?
Yeah, I think this is really mostly driven by business realities. Tether has a lot of resources. They can ship quickly. They already know how to do a stablecoin. The timeline for having to comply with Genius is not particularly close. And so I think they're going to be sort of bigger, slower moving companies that want to do Genius Act compliant stuff. And that's going to be driven by the regulation. I think they just happen to have it ready. And look, there's no secret about close ties between the USAT project and the current administration. And I think the sort of haste there is really driven by how can we take advantage of an administration that's going to be supportive. My personal view, like I'm actually kind of a big fan of Tether. I think they have a really unfairly bad rep in both parts of DC, mostly Capitol Hill, more than the administration, and they have a bad rap absolutely on Wall Street, I think undeservedly so. They were pioneers in the stablecoin space. I think they're like a really interesting sort of international force, right? It was reported this week they have the largest hoard of gold outside of a nation state, 140 tons worth $23 billion. That's really notable. They keep in a nuclear bunker in the Alps. I think they see themselves as really sort of a interesting sort of almost like network state like buffer between the sort of the West, which is sort of otherwise led by big tech and centralized forces there, and the East, which is led by sort of Chinese communism and centralized forces there. So lots of good things to say about Tether in general and the role that they're going to play. I don't know how impactful this US SAT thing really is, if I'm being honest, though.
Say more.
I think this is like a America coded, red, white, and blue washing of like, I don't. If you look at Binance US, if you look at the sort of dear departed FTX US, like these are watered down versions of a main product to have some presence in the United States, to have a friendly face. I think that's mostly what USAT is. Now, it'd be interesting to be proven wrong. But what's big about Tether is it's like really deep liquidity. It's the sort of role it plays in DeFi, and having sort of a version of Tether that's not fungible with that main very deep liquid Tether doesn't seem like as powerful a product.
Yeah, that's interesting. And there's also definitely the interesting question of how it interacts with Circle too. Ken, I don't know if you want to weigh in here, whether you see kind of more, U.S. domiciled demand for a Genius compliant stablecoin, and maybe whether you think Circle might win on the U.S. front.
Yeah, sorry. One more point before you get to that, just for people who are like bought into the narrative of wanting a quote unquote like hyper compliant stablecoin, and like that's the branding they want. That's the lane that Circle is in, and I think because of all the fun on Tether, it's just gonna be very hard to compete. But Ken, you talk to more sort of U.S. institutions and policymakers who are like, I think, very focused on this issue. So,
but I think people in Washington certainly are starting to recognize what Tether is. I mean, it is the greatest force of dollarization since like post-war Bretton Woods. If other stablecoins are really non-existent overseas. Now, this could be. I mean, if you look at the people behind Tether, not just Tether crew, but Anchorage Digital is a really emergent digitally native bank. Tether obviously has all kinds of partnerships at Cantor Fitzgerald, which is well connected in Washington. It's not surprising to me that they hired Bo Hines, Patrick Witt's predecessor at the White House at the Digital Assets Working Group. I'm not really surprised they wanted to be in the U.S. market. I think they probably thought they had to be in the U.S. market just because. I agree with Zach. I think Tether's appeal and its power is its global reach. And this is ultimately what will, I think, fulfill the national security goals of dollarization. I guess you could see, thinking of Tether's Wall Street partnerships. I mean, I think they could become an option for institutional players who are looking to get into stablecoin business. I think that's probably a little bit ways away. But my gut is that they felt like they need to be part of this. If nothing else, maybe that helps alleviate some of the. There is a little bit of Tether FUD in some circles in DC, not all circles, but in some circles, there's still some Tether FUD about what they enable and what they don't enable, and how cooperative they are with law enforcement. So maybe this could just be what they viewed as a necessary step. They needed a sort of regulated anchor in the U.S. market. But for me, Tether's power is always going to be its global reach, and that global reach, it's still going to be hard for that to exist inside of a Genius framework.
I'm curious. I want to kind of pull on this thread a little bit more, and either of you are welcome to jump in here. But if it's the case that this is sort of a saving face, or kind of, hey, we're gonna make ourselves look good to American regulators approach, which I personally hadn't thought about. What's the point of that? Like, if they're sort of operating, as successfully as they are overseas, they, have absolutely kind of won the global stablecoin race. Can you just like explain maybe in more simple terms, like why that's a sort of positive move for them to make?
I'm speculating here, right? I mean, no one said that out loud. I think Tether's, at the end of the day, Tether is still like a top 20 holder of U.S. Treasuries, which buys you a lot of friends in DC, no matter what you do or don't do, allegedly. As again, I read the same Bloomberg article as Zach this morning about Tether's gold reserves. I mean, they are a beast. I mean, it's the most important company most people have never heard of. And I don't doubt that there's a business rationale for this. I mean, again, think of their partnerships on Wall Street. Just Cantor Fitzgerald alone, if they built, if they decided to go the stablecoin route for their overseas business, it would be potentially huge. And if they did it, they would not be the only ones. So I think there is a business rationale. But again, I think that it's important for Tether to put a good foot forward in DC. They're so big now where they just, I think also probably the Tether team doesn't really like being accused of facilitating all the horrible things in the world that some people say about Tether. And you take this first step and say, look, we're in the U.S. market, we're legitimate. You could on some, depending on what happens to Genius and implementation. I mean, Genius passed, but Genius is just still paper, right? There's been no implementation. There's no framework. Has not been implemented yet. So you could still see a time where aspects of the business merge, depending on what happens with Genius implementation and what happens with the global market. But I don't doubt there's and I don't want to attribute motives. I'm just speculating here. I think there's probably money to be made. If there's money to be made, Tether will find it and make it. They've proven that they are really an incredible company. But I just think that because of the size and the political dynamics they face in DC, it was a good move and makes sense to have a regulated U.S. presence.
Zach, anything to add?
No, I agree with that. I think it's mostly a PR move. I mean, if you think this is in the grand scheme, it's such a small thing for them, right? Like, what are the costs? There's like minimal code changes. They probably paid for like a memo from a large law firm saying that this version is Genius Act compliant and has the right reserves, but like
little Claude code vibe coding, and you're good. And you're good to go. You are Genius compliant.
Yeah, no. You want the apps to sign off on this one, and then whatever they're paying Bo Hines, and like that's like nothing to Tether, and it buys them some goodwill. It allows them to have Bo Hines as the head of something Tether related to be their ambassador in DC, which is probably worth more than they invested in all of the USAT thing, even if USAT doesn't amount to anything. And then it's also like a hedge on like the OCC turning on them in 3 years, which is the main risk under the Genius Act.
But some of us are heading to El Salvador this weekend to Tether's Plan B conference, so maybe we'll hear why.
Yeah, maybe we'll discuss next week if you hear any inside baseball.
Live from CCON.
Love it. Oh man! All right.
Some people need to check their bags before they get on an international flight. I'm just saying, there's not me.
Yeah.
But there are people I know that need to be very thorough in their bag searches before they put those bags through a detector of anything.
So okay, this episode will probably get published after Thursday, January 29th, but tomorrow there's two kind of key digital asset developments happening in Washington, D.C. The first is a SEC and CFTC harmonization event. Basically, the two primary regulators for digital assets are getting together and trying to kind of hash out jurisdictions and all that good stuff. So we'll talk about the details of what that might look like. And then there's also a House Agriculture and Digital Assets Committee markup scheduled for tomorrow as well. Again, that's Thursday, January 29th. And so by the time this is published, those will probably have happened. So Zach and Ken, be careful with your predictions here. But yeah.
No, we're being held accountable now. Look at that. I hate that.
I love it. That's what we need. Just curious on what we expect to see come out of those events, and if there's any kind of symbolic nature of those events, like what the fact that they're happening says about kind of the state of digital asset regulation in DC, and then obviously if you are expecting any potential outcomes, would love to kind of hear what y'all are thinking.
Yeah, so I think they're the different events, about different branches of the U.S. government, and so I think they're going to go pretty differently. With regard to the SEC CFTC thing, I think you're going to see a lot of holding hands and harmony between these two regulators. I mean, there's this joke that Bill Maher makes a lot about sort of the American system of how we apportion the Senate, that they're like, why do we have two Dakotas, right? Like there are four senators from Dakota and there are two from California, and it's always sort of mystified, but why do we have two like financial asset regulators? Why do we have a CFTC separate from the SEC? Most countries don't. It creates sort of a weird, confusing system. Anyone who's ever tried to set up like a fund, there are separate rules for, under the Advisors Act, under securities law. If you're a commodity pool operator, there's the NFA. Like there's all sorts of like crazy Byzantine regulations based largely on our financial regulation system that was set up in the aftermath of the Great Depression, not the global financial, the Great Depression in the late 20s to early 30s. And so it's a mess. And so it makes sense for these, both financial regulators that are both parts of the executive branch that both answer the White House to work closely together. Both the head of the SEC and the head of the CFTC are, relatively hands-off, pro-crypto people in the current administration, and so I think they're rowing in the same direction. And so, we know that what the industry wants is to move jurisdiction over crypto markets strongly out of the hands of the SEC and into the hands of the CFTC, mostly because if you're launching a new token, it is under our current laws way, way easier, to the point where it's like an existential question. If you're a commodity, you're fine, right? Like currently, there's not really any regulation over commodity spot markets. That would change if the market structure bill passes, right? One of the big things that the market structure bill does is to give the CFTC additional authority over crypto spot markets, including things like Bitcoin that are not currently regulated. Currently, the CFTC mostly regulates derivatives and futures. So if you're trading oil futures, the CFTC regulates those markets. If you're buying, like a jerry can of gas, the CFTC doesn't usually get involved in that. For the first time, we're going to give the CFTC regulation over spot markets. That's probably fine for this CFTC, kind of a mixed bag going forward. One of the reasons we talk about on this podcast, absent the developer protections, we're not necessarily in love with the idea of the market structure bill otherwise. It's really all about the BRCA for us. But I think you'll see, they're rowing in the same direction. I think that's already been happening. It makes sense. Yeah. Now I'm now vibe commenting on the ag side, because Ken is going to have much better, more recent intelligence on this than I do, and so we'll see how well I do here. Sort of like bring my finger in the wind and seeing where I think it's going. I am pretty pessimistic. The sort of story of the ag markup so far, it was supposed to be the same day as the banking committee markup. That didn't happen. That got pushed to see what happened with the banking committee. The banking committee markup process, fell off a cliff, Looney Tunes style, as there was infighting, and then Coinbase withdrew their support over the stablecoin yield issue. Then the ag markup got delayed. Then we saw what was supposed to be a bipartisan draft come out of ag, and that we just got a Republican draft. That's mostly basically the same as the Clarity Act in the House. It doesn't seem like Democrats particularly want to play ball at this point, and so I'm not hugely optimistic. But another area I'd love to be wrong, and I'd love for Ken to tell me that I have no idea what I'm talking about, and it's about to go swimmingly.
I mean, the head of policy knows, generally speaking, what he's talking about. Yeah, so on the CFTC stuff, I mean, remember also, like, CFTC just got a permanent chairman. There was some trouble getting a nominee through. I think he's only been there for maybe like a minute.
Friend of the pod, Mike Selly.
Yeah. Oh, there you go. Yeah, he's been there for about a month. So and so you get in just before the holidays. So I think he's probably needed a few weeks to find his footing. And of course, his deputy Carolyn Pham went to MoonPay. So new leadership of the CFTC. I think also it does send a good signal. I mean, there's still a lot of drama around market structure. And a lot of that drama is surrounding SEC versus CFTC and who has authority. It's a good look for the administration to show both regulators getting together and talking through what how they're going to cooperate. I think it makes sense. We'll see what comes of it. But I echo everything Zach said there. We have two pro crypto regulators right now. We'll see how long that remains, but for now we do, and I think they're going to do what they can to establish some real precedents that are beneficial for the industry. On Congress, so I think the key. I joke, but I talked to some of the ag people, and the ag committee is just like, these staffers are just like crypto lobbyists. Like they deal with like ag lobbyists like Arthur Daniels Midland and and people from like Iowa, and now all of a sudden they've got like crypto lobbyists like banging down their door. I think there's a lot of fatigue. And I think it's kind of funny because people always ask me why, it's the more reasonable question. Why is the ag committee doing anything on crypto? And I think sometimes the staffers are asking themselves the same question. But nonetheless, it's just not what they do. But they come out with text this week. I think the real key of that is I think the text that came out of ag is probably in itself unworkable. It avoids some of the stickiest, thorniest questions like the stablecoin issue, stablecoin yield issue. What it does show, though, especially following the sort of the why the coyote off the cliff, following Zach's metaphor, off the cliff moment last week, that does show continued momentum in Congress, and I think that's important. I think you need to show momentum that this is, there was a bad week, but things are still moving forward, and the other key oversight committee, is working, which I think is important. And overall, I think, Kirsten Gillibrand was on CNBC this week for a long interview, and she's very, very confident this is going to get through. And, she's a leader in the Senate on the Democrat side on this. Who knows what? I'll tell you what, some of the things that have got me concerned over the past couple of days, some calls I had last week. I am increasingly concerned. We've talked about this on the pod before. The possibility of trading aspects of BRCA, of blockchain regulatory certainty act provisions, for other things. And there's definitely a rising drumbeat of this. I'm hearing more and more from staffers about so-called national security concerns. And again, what do I always say, right? AML and national security concerns are always code for like your self-custody. There's been a lot of that and it's not just on the Democrat side. There have been some Republican senators. Chairman of the Senate Judiciary Committee, Chuck Grassley, most famously publicly has talked about his concern that language in the BRCA will weaken 1960 statute authorities. Zach could talk about that's like legal stuff, but it's money laundering things, and money services businesses, that kind of thing. Zach can talk about 1960. That's not a great sign when you have like bipartisan concerns about this. But I think this sort of reflects some of there have been in the past like some lingering concerns, even on the GOP side, about some of this legislation. I think they've largely been lockstep and followed the White House's lead on this. But because market structure has been bogged down for so long, like everything else, these sort of cracks start to widen a little bit. So we are going to have to spend a lot of time focusing on, I'm not worried about the ag markup. I think ag will be fine. But when this bill gets out of, when they start negotiating the two versions of the Senate and the ag bill, I think we're going to need to be really attentive to what happens to BRCA and that those protections are not weakened. I had this debate with a staffer. Debate was a conversation last week, and they're sort of stuck in this sort of very parochial, narrowest interpretation of what national security means. And it's always comes down to like surveillance and control. If we can't surveil it or seize it, it's not national security compliant. I mean, I'll accept that argument for law enforcement, but national security is not just about like surveilling and controlling things. National security is about economic development, about financial competition, about all kinds of other things that are not just your ability to like follow stuff. And I think there are a lot of staffers that are open to that. Certainly, there are a lot of national security people that understand that. They're a lot more concerned about big picture power politics and the big levers that control the way the what global environment is going to look like than they are about the ability to trace things. But there's still this chorus of staffers that are stuck in this. We have national security concerns, and those concerns just boil down to what are essentially law enforcement concerns. So the debate's not done. I'm actually a little more concerned about BRCA than I was a few weeks back. So we'll see. We'll have to be intended. We have friends on both committees who are Bitcoin. I think I would say this: the Bitcoin community has friends on both committees. We'll look to do the right thing. But like everything else, certainly the Senate, it's always about negotiating and getting if everybody wants a bill, the bill that comes out isn't not necessarily always the best bill. So this is where participation starts to matter. If you are, it doesn't matter whether you live in a state with a member on either committee or not. You need to call your senator, and very politely and reasonably let them know that you do not support any changes to the BRCA in market structure. This is an important time. It's an election year. There's a lot of pressure on Congress to get this done. The interests of the Bitcoin community are largely aligned with the crypto community, but not always. And I don't sit on your hands. If you've ever thought about calling your representative, do it now. Don't sort of overcome the feeling that, it's a waste of time. It's kind of not, certainly in an election year. It takes an email or a quick phone call. Let them know who you are, you're a voter in their district, and you want them to support BRCA as written. It's now or never, because again, I got some sort of weird vibes last week, and we're on top of it. But we're a think tank. Can't. Unfortunately, we're a think tank, and unfortunately, we're a think tank that just doesn't do the sorts of things the industry does. So Bitcoiners, this is about you and your Bitcoin, your ability to self custody it, and your ability to have people write code for you. For those of you like me that can't write code, Claude Code or not. So call your representatives, call your senators, let them know that BRCA is important to you.
And if you're a vibe coder.
Yes.
Zach, I want to kind of circle up on this discussion with just for folks who maybe aren't quite as familiar with the delegation of powers in DC, what exactly can the SEC and CFTC kind of enact during the Trump administration, right? Like what would be the product of this harmonization event that would be either lasting or, just for this administration? And then how does that interact with basically the market structure conversation happening in Congress? Do we need everything that gets discussed in this harmonization event to be codified by Congress? What's just kind of like the breakdown here of who can actually do what on this particular issue?
Yeah, so the harmonization practically is reacting to two things. One is the opposite of harmonization, the turf war that happened between the CFTC and the SEC in the previous administration over who was going to be the main crypto regulator. They want to undo that, do the opposite of Gary Gensler era, and instead of the SEC coming out as sort of the main crypto regulator, I think what we're going to see is it's going to last just for this administration, but they're both going to agree that the CFTC is going to be the prime crypto regulator. So that's one thing they're reacting to. I think they're also reacting to worries that market structure is not going to pass. Market structure would make that plain as a matter of law that the CFTC is the main regulator. I think they want to start acting that way even if the bill doesn't pass. So I think this is a contingency plan in part, at least.
And then on the 1960 question, I do want to dig into that a little bit more. What are the details of that, particular statute? And I guess the bigger question is why is that being used as the scapegoat here?
Yeah. So before we get to specifically 1960, I wanted to address the number one question this week from our Patreon supporters. You can't get anything past them. They noticed that in the ag markup, shout out to the Bitcoin Policy Power Hour crew. They noticed that the ag markup of the bill, there's nothing about the BRCA. There are no developer protections. And what is that about? The answer is that the Ag Committee is really about the CFTC side of things and commodities regulation, because most of our commodities historically came from farms. That's why the Ag Committee has jurisdiction over this. And so that's really not their lane. That's the Banking Committee's lane. And so these issues that Ken brought up about 1960 and BRCA are going to come up when there's sort of harmonized draft between the two committees. And it is not specifically going to happen around the Ag Committee. And so you don't need to worry about that for now. Section 1960 is a criminal law that makes it a crime outside of the Bank Secrecy Act itself to run a unlicensed money transmission business. There are three subsections of Section 1960. There is not having a federal license. There is not having state licenses. And then there is a weird one that ended in convictions in both the Samurai Wallet and Tornado Cash cases that actually doesn't strictly have anything to do with having a license, but it's being a money transmitter and knowingly transmitting the proceeds of crime. And those are all criminalized under Section 1960. Now, there are sort of two concepts here in what Ken said that I think that, not what anything Ken said is wrong, but the people who are having quote unquote national security concerns about narrowing 1960 that are wrong. One is that 1960 is being narrowed at all by the BRCA. I would strongly disagree with that. 1960 makes it illegal in all three flavors of 1960 crimes. What is being criminalized is being a money transmitter without proper licensure or knowingly transmitting criminal funds. If you look into the criminal laws here, and there's a great paper by Dan Barabender from Variant Fund on this issue, really looking into the history of what money transmission means for the purpose of Section 1960, for those of you who like dense law review articles. But the spoiler is the definition of being a money transmitter under 1960 is accepting and then transmitting funds on behalf of others. If you accept and then you transmit funds, somewhere in between those two things, just as a matter of how the English language works, you will have custody or control of those things. What the BRCA does is to clarify this point that is already true in the law, that you need custody or control in order to transmit something. That's what the word transmitting means. Despite sort of weird Orwellian twists on that that we saw in some of these prosecutions of non-custodial developers. And so I would strongly push back on what this bill does is to narrow 1960 scope. I think it just clarifies it and stops the government from doing illegal overreach on what those concepts mean, which is different than narrowing. And then in terms of national security, I guess there's like an interesting philosophical question about what's the difference between law enforcement and national security. And historically, there have been other turf wars, right, between like the FBI and the CIA about who has what role in what. If we're really worried about terrorists, there are 6 ways from Sunday to criminalize what terrorists do. Like, terrorism isn't legal because we're not, because you can write non-custodial code. There are all sorts of ways that like the CIA can go after bad actors that have nothing to do with Section 1960. 1960 is specific to law enforcement. It's what is or is not a crime. Money laundering is still a crime. Crime is still a crime. And the very narrow question here is it a crime to publish code that allows other people to move their own money? And if you're making a national security argument here, that like you got to be honest about the argument you're making is if we are not able to throw developers in prison for writing non-custodial code, then it is damaging to national security. And I think if we were having that argument more honestly and out in the open, it would be seen for as silly as it actually is. I think this stuff is already legal. We have sort of mixed precedent in the courts. I am worried about the chilling effect of the cases we've had, but the BRCA, of anything that happens in the Clarity Act, right? It is the part that is most clearly just clarifying what I think the law already is, as opposed to like the securities and commodities law stuff that's actually creating new rules.
Ken, anything to add, or should we move
That's
on?
right. That's right. Now, Zach, I hope that those lawyers who wrote that paper are paying you, because like they're going to get like another 5 views of their paper now, thanks to this. And I think a lot of the, and we'll see what happens. I think some of the concerns out of what you've heard from like Chuck Grassley and Dick Durbin are about jurisdiction. I think their point has been also like you're tinkering with laws here, and we're the Judiciary Committee. So we'll see what happens. But I agree with Zach. I mean, Zach's, if you want to talk to somebody about who knows about like privacy and the rights of developers and why it is free speech, talk to Zach Shapiro, head of policy, for a reason.
Last thing on market structure. So I was at the National Energy and Mining Summit last week, which was a fantastic event. My second year going. Bitcoin Park is awesome. If you haven't been, definitely make sure you get out there at some point. But being the resident kind of policy knower in the crowd, and obviously I'm not quite as plugged in as Zach and Ken, the question that I kept getting was, why did Coinbase have so much power, right? Why was there such a stink? Why were senators like Senator Lummis saying, hey, we're gonna have to go back to the drawing board, at least in part, on this, because industry has basically said no bill is better than the bill as it stands. Just for folks who generally aren't kind of as plugged in on how DC operates, which I suspect is most people, and was myself until I started here at BPI. But why does Coinbase have so much power over this particular process? And is that true of other industries? And what's the takeaway here for kind of market structure at large?
Yeah, I think there are 2 reasons. One, we're about to get a crash course on when we see the fair shake filings for 2025, which is that they spend a huge amount of money on politics, and that gives them a big voice, and they are sort of the single biggest player in terms of money there. And then second is reputation. Right? They have sort of the opposite, like we talked about, like kind of the stink that Tether has on it. Coinbase has the opposite. They've got the halo. They are one of the few sort of crypto companies that's seen as the adults in the room, especially by people on the mainstream left who don't actually know anything about crypto. It's like they've heard of Coinbase. Coinbase, and look, Coinbase did a good job cultivating this reputation. Like they were user friendly and early at a time where, when Coinbase got started, everyone was using Mt. Gox. So like they are seen as like a big adult in the room. And I think that gives them a lot of social and political capital, sort of independent of the staggeringly large amounts of money they spend in DC. But it's those two things that explain it. What I think is interesting is some of the reporting we've seen. Has been great reporting by Eleanor Terrett on this. They are maybe overplayed their hand here. And I think especially there are Republican lawmakers who do know about crypto, who are like, listen, Coinbase doesn't get to speak for the industry like this. There is a real split between the people like Coinbase who are very worried about things like stablecoins, and then, on the other side, people who have a lot of skin in the game and DeFi and skin in the game in terms of like token classification, who are like, what are you talking about? Bad Bill, like this is everything we want other than the stablecoin yield. And I think that, if we see a compromise on this, which I'll be honest, I'm still bearish about, it's going to be because banks are not going to come back to the table. They don't have any incentive to. It's going to be Coinbase comes back to the table because they realize they overplayed their hand. Like they have a lot of skin in the game about what are the tokens that are trading on their platform. Are they securities or commodities? That really matters in 2028 if we get a new administration. And they don't want to wear out the goodwill they have invested so heavily in.
Zach, follow-up question, then Ken will go to you. Do you think this is sort of indicative of where Coinbase sees their business model going, right? Because I think for most of the time prior to the stablecoin issue becoming a larger question in terms of their business model, right? It was a sort of retail-focused exchange, and there's obviously some institutional elements to it too. But I mean, my sort of gut reaction was, hey, this says a lot about where they see their business model going, and maybe they're actually intending to kind of shift away quietly from that more like retail sort of invest in $1,000 of crypto on the side kind of business model. Do you think that's a good read?
Yes. I mean, like, at least in large part, right? Like the stink that they're throwing up about stablecoins clearly says something about how important the stablecoin and stablecoin yield ecosystem is to them. That's clearly a huge part of their business. The thing that they took issue with, I think we talked about in a previous podcast, that's even controversial whether it's an issue, this section 505 about what authorities does the SEC have or not have with regard to tokenized, like real world assets, like actual securities equity in a company. I think they see that as the future, right? Or equities and bonds and stuff and real estate going to move on chain. I think we may have sort of worn out retail's appetite for buying the next dog coin or layer one, whatever. And so that is definitely all shifting to some extent. But they still make a lot of money on crypto trading. And I will say, for what it's worth, like Coinbase has, to be fair to them, they have also said the developer protections are a non-negotiable red line for them in the bill. They are more exposed than anyone. A huge part of their business that's going really well is their base ecosystem, which is an Ethereum L2 that, so far as I can tell, just runs on a single server in Coinbase's basement. Like, if you're going to be like, okay, someone maybe has custody or control like over they're pretty exposed if they are responsible for everything that happens on their non-custodial base platform, which has gotten a lot of usage because it's fast and quick and is like a real competitor to like Solana in terms of BNB. And so yes, like it does say something, but I think let's not also lose sight of the fact Coinbase has a lot of exposure on the DeFi side, and they continue to have a lot of exposure on are the tokens securities or commodities, because they are a huge trading venue for that stuff. And if everything on their platform is an unregistered security, like we already saw what happens when the SEC goes after them on those grounds.
Yep. All right, Ken, what you got?
I'll say this. I was really, really high on Brian Armstrong last week. Like, if any of our listeners can identify a gentleman named Francois Villeroy de Gallo, raise your hand in the comments. He's the governor of the French Central Bank. And Brian Armstrong at Davos last week mixed it up with him about the nature of money on stage. It was awesome. Francois Villeroy de Gallo, as his name, sort of would imply, is sort of the epitome of an aristocratic globalist. And he and Brian Armstrong debated politely the nature of money, whether money the role of estate money. And Brian Armstrong really held his own. It was great. So it was a great moment for the CEO of Coinbase. Back to what we were talking about. I agree with Zach. I think that there's a sense that that Coinbase, they first of all, they flex a lot of influence because they flex their influence. Brian Armstrong, it's a publicly traded company. He is not afraid to communicate. He's in DC all the time. He's not afraid to engage. He's part of the process. And a lot of the other CEOs of exchanges in the United States just don't want to do that for different reasons. He does it. And he's got a pretty big team in DC. So I think just that alone gives him an outsized voice because he's actually in the arena. So I think that's part of it. I do also think that I'll just sort of to give the other side of the coin, like we saw last month, the banking industry launched their new 501c4, the American Growth Alliance, which is their response to the beating they took last year on legislative events on Capitol Hill. Nothing that happened on digital assets last year was in their interest, or they didn't like any of it. And I think, banking lobbyists at the end of last year, if they, gave themselves report cards, it was made probably deep. We'll give them a D because they did manage to block stablecoin yield in Genius. But the banking lobby, took a lot of lumps last year, and they're getting together this year, and I think you're going to see them spending a lot of money. Who knows if they can compete with Fairshake? It's down crypto and that whole infrastructure that's been built up. But they're going to try, because I know that because they're saying it publicly that they're going to try. So we'll see. But I do think that there's so much fatigue on Capitol Hill on this issue. Like, they just don't want to talk about it anymore. And I think when Coinbase came out really, really strong, like everything else, they were just like, I think that the staffers and members are fatigued. It's been 18 months. Sorry, it's been 12 months, but 12 months of a lot of crypto stuff on the Hill. When before we had none. And the crypto industry is very aggressive. I had one staffer tell me just yesterday that he had 6 meetings with Coinbase over 3 weeks. That's a lot of time in your calendar, right? To talk to an industry about something that a lot of your constituents don't care about. Some do, a lot do, but a lot don't. So I think there was just a little bit of battle fatigue on the part of the staffers, and because Coinbase was the one that threw sort of the wrench into the gears, I think they're taking some of the blame. We'll see what happens when everybody regroups. Maybe call it next week now that AG is doing their thing. We'll see. But and in Coinbase's defense, like make me an argument from the financial inclusion perspective that yield on stablecoins is a bad thing. Why can a stablecoin issuer get yield from the Treasury Department, from Treasury, but the person who holds it can't? Tell me how that's financially inclusive. Good luck with that. And also, if you want to drive global demand for stablecoins, like imagine a world where somebody who lives on a couple $100 a month can actually earn yield on a stablecoin living in Argentina or Ghana or wherever the hell, right? Imagine the demand for that product would be insatiable. So I know Coinbase is self-interested here. I'm sympathetic to the argument from that perspective. But nonetheless, that's not DC's not, that doesn't matter. So again, I think there's the response to what Coinbase did is a lot of just the fatigue of market structure been dragging on for months.
Is there a world where this bill proceeds, I guess the banking committee draft proceeds without Coinbase's support?
Ooh, Oh, I don't think again, remember what Coinbase is. They're a publicly traded company. That works in 50 states. I don't think Coinbase wants to be. I don't think Brian Armstrong wants to be in the rotunda of the Capitol saying we oppose this bill and then it passes. That's sort of a bad look, right? No matter what happens, unless you really, really hate it, you never hate something that passes the way in Congress. It's just the way it works. And because the nature of what Coinbase is, like I mean, something would really, really, really have to change. I can definitely see a world where we, as BPI, as Bitcoiners, are like, we don't like it and we oppose it for things that are reasons that are very different than Coinbase. But I would be very surprised unless something really goes off the rails. I think you will see, I think you'll see comments along the lines of this is a good start. And we'll be looking next Congress to further refine this legislation as opposed to saying we oppose it.
Mm-hmm. Yeah, I think the answer to that is definitely no. I think it's unlikely that the bill moves forward unless Coinbase decides that they like it. And in the unlikely but possible event that starts to happen, I agree with Ken. Coinbase is going to flip and say they like the bill. And by the way, I mean, to Ken's, like I also am sympathetic to the Coinbase's point that there is no principled, like the steel man of why they shouldn't have had yield and Genius is because, okay, now you're creating like debt securities. This is not just payment stablecoins. This is like something that people are investing in. But then the counter argument to that is like, okay, well then make the regulations to make it safe, right? We're not legalizing like crazy private credit financing backed by, dentists and, Ethiopia. This is like, it's backed by treasuries. Like it's, and you need to have the reserves and maybe you need a license. Like this is very heavy regulation. And so there's, it is just naked protectionism by the banks, and Coinbase is right about that, but you can't die on that hill. And just, if you take any strategic forethought about this, like, fine, like if stablecoins proliferate and people are going to realize, hey, it'd be great if I also had yield, and then in the future it will be easy to get political support for adding yield. And so it's better to take what we can get now than blow this all up.
All right, last topic for the day, and I think this is obviously in the zeitgeist right now, but the debasement trade, which we've spoken about briefly in the past on this show, but I want to spend the last kind of 10-ish minutes here talking about it. So silver, when I checked right before we hit record, was about $114 an ounce, and gold just over $5,300 an ounce. These are levels that have never been seen before, and returns that have never been seen before, at least in modern history. There's so much to unpack here. I'm curious whether, I guess the broad question here is, do you see the debasement trade continuing well into 2026? Do you think that the momentum that we've seen, particularly in precious metals, will continue? And do you see this extending out to Bitcoin?
I do. The silver trade is, I've never owned silver. I probably have some in the house that, my wife puts out on holidays. But yeah, I've never thought about buying silver. But it's a really interesting story watching. Like, I follow a few people on Substack that write about this stuff, and it's super interesting. The what's happening in paper markets and derivative markets. It's fascinating to watch. It is like financial plumbing, and it's like, all the things we rant about financial plumbing and paper this and paper that. The silver trade is that. It's remarkable. I mean, it's worth nerding out for an hour just to watch what's going on. And what's happening in China, and and there's a premium because of VAT taxes, and there's all kinds of interesting stuff going on in the silver market. And I remember silver also, the reason why it is not like the best money is because it has this dual use. But it has uses, right? I mean, every time we fire a hellfire at somebody, we're incinerating a lot of silver. That's in that missile. But the larger picture, 100%. I mean, if you for financial market nerds, you watch what happened in Japanese markets in the yen versus the dollar. There are crazy things going on in FX markets right now. The White House seems to be deliberately encouraging the dollar to go down, because that's sort of a prerequisite for bringing, for making it economically sensible to build things in the United States and export things in the United States. So I think a lot of this is orchestrated. I can't imagine what's going on at Treasury now as they try to keep a leash on make this sort of a slow decline. But I think there's a lot going on in the Japanese story that sort of reflects what's going on in dollar markets. But it all comes back to debasement trade. And we talked about this before, like the world, over the past couple of years has decided that they're kind of done with like the dollar standard in its traditional form. We'll call it the Treasury standard. And they are making moves to undo that. I mean, right now, gold, it depends on who you ask, but gold is roughly, some people say a little more, some people a little less. We'll just call it more or less the same, roughly the same. Gold holdings by central banks are about the same as your Treasury holdings at foreign central banks. That's a huge marker. That's a big deal because if you look at charts, 30 years ago, there were very few central banks holding gold. Now it's more or less at par with treasuries. It doesn't take, you don't have to be an economics major from the University of Chicago, PhD, to figure that out, what that means. And, a lot of it's interesting because it's orchestrated by a lot of people. Like foreigners are reducing their treasury holdings because they just don't like being under that umbrella. We are debasing the dollar because we have to achieve other policy goals, reindustrialization. So there's a lot of, everything says debasement trade is going to continue until it's some kind of reset. Like I don't. Why can't we see gold at 8,000 at the end of the year? I think you probably can, maybe higher. It can't. It can, right? It can't. Watch it. Like silver was $27 like a year ago, right? It can, when you're in times of reset, all kinds of crazy things can happen that normally it can't happen. But clearly it's happening. Gold jumps like $100 a day. It's pretty nuts. And I think that is all debasement trade. There's a little bit of speculation in there, but it's big players, moving their reserves into a neutral reserve asset, which is that. I do wonder, like I had this debate with Connor. Connor's always, my colleague Connor Brown, like, don't look at the price because I have like trading view up obsessively. I'm always looking, God, it's down again, up again, whatever. It's like Tourette's for me. It's just a tick. But what we see, there's been this has sparked a lot of interesting insight into Bitcoin and Bitcoin markets and how it works. Theoretically, the way the dollar is going should be great for Bitcoin. I think, and this last people read about cycles and how, the gold cycle usually precedes the Bitcoin cycle. We'll see. Again, I sort of like at the beginning of the year, I actually still believe that this is the year where Bitcoin reaches that level of self-actualization because of what's happening on the global stage. Things that, then again, it's interesting because we're all kind of pushing the same direction, right? Toward a realignment. Even though we have different, us and China and Russia and the Europeans all have different ideas what that realignment should look like. But right now at this stage, we're all kind of doing the same thing. So to me, if Bitcoin is ever going to work and fulfill that promise, this is the year. This is the year it's going to happen. We'll see. But I think the debasement trade is here until we get some kind of reset. The debasement trade is here. Certainly through 2026.
Here's hoping it's the year for Bitcoin. All right, unfortunately, I got to run.
Sounds good. All right, we'll see everyone next week.